Let's take a moment, look at the disclaimer. This content is for educational, information, entertainment purposes only, and nothing should be taken as a recommendation, buy, sell, or hold any securities at any time. We are here just to spread the word about how BTA analyzes the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we will. We are going to make money, lots of money in the middle. Okay, this is our weekly Bollinger Band strategy update. Okay, this is part 2. And this is very important because we did a video last weekend on July the 3rd, 2022. It was called This Happened Only One Time in 20 Years. I just did the first update for the Bollinger Band weekly Bollinger Band strategy update for this week. I told you to go back and look at that video. In part 1, I told you to go back and look at that video. I'm telling you again, go back and look at last weekend, July the 3rd, video for the weekly Bollinger Band strategy update. It was called This Only Happened One Time in 20 Years. I'm telling you, this is important. Okay, in part 1 of this week's update, weekly Bollinger Band strategy update, I told you we are not going to buy according to our Bollinger Band trading plan this week. We are not going to take the pivot because of the key moving averages, okay, that we were coming upon. Go back and look at that video. I don't want to make this too long, so I'm just saying go back and look at that video so you can see it for yourself. This video is about what only happened once in 20 years. So I'm going to minimize this, okay, and I'm going to take you back to 2008 and 2009, okay, and we're going to discuss this real quick. Let's take it back to 2008, 2009. Give me 1 second. Okay, let's take it back. Set this up. And let's move over to 2008, 2009. Okay, give me 1 second here. Here we go. 2008, 2009 area for the DIA. Go back and look at the first video I did on July the 3rd last week, and I explained all of this. Okay? Now, the reason I brought you back here, because I just want to show you something. When we had, go back and look at, like I said, go back and look at the July the 3rd video, and it's going to explain everything clearly, what I'm talking about right now. But in the 2008-2009 period, we did something where we broke below the lower Bollinger Band. You can see right here, we broke on this week. This is a weekly chart DIA. The same thing happened for the Standard & Poor's, the IWM, the QQQs. In 2008, 2009, we broke below the lower Bollinger Band. RSI was oversold. Stochastic was oversold. We did it once, we did it twice, and then we finally did it the third time. Okay, now, if you go back and look at that video, in between the first break and the second break, okay, of the Bollinger Band, the first time we broke below the Bollinger Band, and the second time we broke below the Bollinger Band with the RSI and the Stochastic oversold, okay, that was like a 6-week period. So we count on the DIA, it's 1, 2, 3, 4, 5, and on the 6th week we did it, okay, and then going forward until we got the third break below the Bollinger Band and the RSI and the Stochastic was oversold. From this period to here, in this time period right here, okay, for the DIA, that was 15 weeks. And then we broke below it again, and then that's when we ran off. We broke out and ran off to new highs, okay? So don't forget that. Go back and look at the March 3rd video. It would explain all of that, okay? Now, let's go to the current price action, all right? Let's go to today's price action. Let me bring it in. 1 second. Let me bring it down here. go to today's price action, and let's look at the current, what's happening now. Okay, let's expand it. Bring it back over. Give 1 second to set this up. Okay. Bring it over one more time. And let's do that one more time. Make sure we got it kind of big here so we can see it. Okay. So now this brings us to the current prices, okay? In 2020. This is current. Let's take this red line out. All right, we don't need that for right now. Take that red horizontal line out. Now this is current. You see right here, we made the first break below the lowest Bollinger Band where the RSI was oversold, stochastic was oversold. Then we broke again in this area. RSI almost got oversold, stochastic was oversold. Okay, but from the first break to the second break, now it was only 1, 2, 3, 4 weeks. Last time we did it in 6. Okay, well you could say 5 because we were still oversold on the stochastic, but the RSI came out. So just say 5. But in the past, in 2008, 2009 area, it was 6. So now we did it in 4 or 5. But now the key thing to remember is that, okay, is that the Bollinger Band, the break below the Bollinger Band in 2008 and 2009 was during a recession year. Okay, these are when we went into recession in 2008 and 2009. That was recession years. Right now, we are not in a recession, but we are close to one. So is this recession? Now remember, this double break of the lower Bollinger Band, this double break where we got oversold on the RSI and the stochastic, only happened once in 2008, 2009. Okay, in the last 20 years. The other recessions over the last 20 years, we did not do this. So this is resembling the 2008, 2009 chart structure. Okay, now we already got the second break. We got it this time in 4 to 5 weeks. Last time we did it in 6 weeks. Okay, from the first break of the lower Bollinger Band to the second break of the lower Bollinger Band. Okay, now from the first break of the lower Bollinger Band to the second break of the lower Bollinger Band, 1, 2, 3, 4. If you count that, that's 5. Okay, so it's similar, but not quite the same. All right, but I'm telling you something here. One of the key things that I noticed that we have to keep an eye on, another reason why I am not going to go long right now, is that the last time when we did this for all the major indexes, I'm going to switch this over to the Standard & Poor's for right now, okay? I want to look at the Standard & Poor's also, all right? The last time this happened, okay, 20 years ago, 2008, 2009, once in 20 years, okay? Look at this. I want to show you something. When we got the break, okay, the second break, we got the first break and then the second break. In 2008, 2009 area, and for all the other major index ETFs, the DIA, the SPY, the QQQ, and the IWM, it was the same. When we got the second break and prices started moving back up, it never made it back above the high of the week before the second break. Okay, it never made it back above the high of the week before the second break or the open of 2 weeks before the second break. So I'm going to try to say this again to make sure that I'm saying it correctly and everybody understand what I'm saying. We got the second break of the lower Bollinger Band. When prices started moving up, it never got above the high of the week before the second break or the open 2 weeks before the second break. It never, when prices ran up, it never made it back to those highs, went above those highs. It never went above those highs, and it never got above the middle Bollinger Band before it started going back down, and then it made a third break below the lower Bollinger Band. And when it made the third break below the lower Bollinger Band, the RSI got oversold again, the stochastic got oversold again, and then when we came out on the third time, we ran off to new highs. Now, between the second break and the third break, that was anywhere between 13 weeks for the SPY, 15 weeks for the DIA, 16 weeks for the Qs. Do you get what I'm saying? In between the second break and the next break that may happen, if the Bollinger Band's stochastic, Bollinger Band RSI stochastic strategy, the weekly Bollinger Band strategy, if it works according to how it has in the past, the last time it made 2 breaks below the lower Bollinger Band, then we got to look for this thing to maybe move up, but not move up past that level I just showed you. I'm going back to 2008, 2009 on the SPY. Okay, I'm going to bring this back over here. Here's the 2008, 2009 area. Let me zoom in on this just a little bit. Okay, hold on 1 second. It's important you bear with me and we work through this, okay? Here's the 2008, 2009 area for the SPY, all right? The weekly chart of the SPY, same thing. Okay, now look. This is the first break. This is the second break. When prices started moving out of the second break, okay, like I said, it never broke above the high of the week before the second break. So if I put a horizontal line across the high of the week of the second break, let me do that. Let me clear this up. Hold on a second. Let me clear this up. Now let me go back and get a horizontal line. I'm going to put a horizontal line right across the high, okay, of the week before the second break. Okay, the week before the second break. You see, when after the second break below the lower Bollinger Band, so we had the first break below the lower band, oversold. Second break below the lower Bollinger Band, oversold. When it started moving back up, it never got above the high of the first week, the week before the second week, the second break below the lower Bollinger Band, the week before it, this week right here. This is the second break. This is the week before it. That high. When prices rallied up, it never got above that high. And it came on down. And it never made it above the middle Bollinger Band. And then we had the third break below the lower Bollinger Band. RSI and stochastic got oversold, and then it ran off. Okay? Do you get what I'm saying? Are you picking up the jewels that I'm dropping? Now, if it did test this high, and it tried to peek its head above this high, guess what? I noticed that it never made it above the open of the second week, 2 weeks before the second break, 2 weeks before. So this is 1 week before, that's the high. This is 2 weeks before that open right there. If prices did break above the week before high, it never broke above 2 weeks before open. So in other words, if I put another horizontal line, right? Let's clear this up a little bit. If I put another horizontal line and I count back 1 week, 2 weeks, and I put it right at the open, okay, right at the open of 2 weeks before. That open was at 2 weeks before the second break. That open was 96.78 for the SPY at that time. See, price never made it above that open. Now, that I noticed that is the case. Okay, I noticed that is the case. And anytime it peeked its head above, the high of the week before the second break, look at that week before that, 2 weeks after, 2 weeks before the second break, and if that open of that week was a little higher than before, then it's not, prices did not break that. It never did that. It never broke above that. It never did it. Okay, absolutely never. All right, in 20 years when this happened, it never did it. So what I'm trying to tell you is that we got the second break now. Prices might move up, but I would be, if we're going to court according to history, I would be careful that when it gets, if it make it to the high, okay, of the week before the second break, it's probably going to get rejected. If it get above that high just a little bit, then The next week, 2 weeks before the second break, that open is probably going to be the area of interest where it might find some resistance and collapse. And for facts, it never got above the middle Bollinger Band on none of the major market index ETFs. The DIA, the SPY, the Q, the IWM, none of it. These are the levels you want to watch. Now, from the second break, when it ran up and it hit that resistance and it came back down and made the third break, like I said, for the SPY, this was 13 weeks. This period right here was 13 weeks. Go back and look at the first one we put up on July the 3rd, and you're going to get exactly what I'm saying, okay? I'm telling you that this thing, prices could easily move upward, okay, and get rejected if it make it that high. Because right now, what I'm noticing is that, and what I said in the weekly Bollinger, the first part of the update, okay, the first video of the update for this week, I told you that prices, okay, were coming right upon some very long-term key moving averages, okay? The 8-week, the 10-week, okay, the 21-week, the 50-day, those moving averages right overhead. So it might not even make it to the high of the week before, okay? So now let's move to today's action, all right? Let's move to today's action, right? This is current, right? This is this current week that just passed, right? So the most recent week right here, okay? Now, let's bring it home to today's action. Here is this week. Here is the second break below the lower Bollinger Band. Like I said, that's 1, 2, 3, 4 weeks for the SPY. 4 weeks for the SPY. If you count this week, that's 5 because we didn't get above the both in 6, really, because we just the cats again counted. But we just say 4 or 5. Okay, 4 or 5 weeks, then we got the second break. Now, what we're looking at, this is the second break. This is the second break. We're looking at price. I'm gonna put a horizontal line right across here so you can see it. We're looking at price. If it does move up, that it's probably not going to get above this high, the high of the week before the second break. Okay, that's at 416. We at 388. That's if it make it there, because we got some very strong overhead key moving averages, like I said. Now, if you notice, that's the week before the second break. If we go back 2 weeks before the second break to the open of that week, then the resistance is going to be right here for the SPY, for the SPY. So if this thing is to move up, if it is to get above the 50-day, the 8-week, the 10-week, and all of that overhead resistance for the key moving average, if it does get above all that, I'm telling you, 415 to 416, I will be careful. And I don't think it's going to make it there by looking at this chart, unless we get above these key moving averages. Because notice that the Bollinger Band is already, the middle Bollinger Band is already trying to go below this level. Remember, we never got above the middle Bollinger Band in the last time this happened, only once 20 years ago. I mean, 2008, 2009. We never got above the middle Bollinger Band. So if prices do come down and the middle Bollinger Band get below this level, then that's going to probably be it. Okay, we got, unless it turns back up, because we never got above the middle Bollinger Band. But even if that's the case and prices does move up, I'm looking for the 415, 416 level to be some overhead resistance. Okay, now I'm just telling you, it never broke above these levels. It never broke below these levels before it rolled back over and got into a third break below the lower Bollinger Band. And that is the case. That is the case for all of the major market index ETFs. The DIA, the SPY, the QQQs, and the IWM. That is the case. If I go to the QQQs right now, let's delete this. Okay, let's move this red line. And I'm going to expand this a little bit. And I'm going to move this over. Okay, so we got the second break below the lower Bollinger Band right here. So for the Qs, if I put a horizontal line right across the highs of the week before the second break, that's right here. Okay, that is at I can't see it too well, but I think that's 312. Let me hit this line here, somewhere around 312.57. Okay, or I could get precise if you want. I could just go to the high. What was the high that day? 312.35. Okay, so the high of the week before the second break, right here, for the Qs. Look where the open was. Look where the open was on 2 weeks before the second break. 2 weeks before the second break was right here. See that? Right now we at 295. We at 295.35 for the Qs. I'm telling you, if it rally up, I'm looking for this thing to try to find some resistance around 312.57 or 308, somewhere in that area. I don't see it getting above, definitely not above this fractal right here, because the most recent fractal didn't break above neither. So I don't see prices rallying up. If it get above here, get to that level, if it make it there, if it can make it there, if it could get above all those weekly long-term key moving averages, then I think this thing might roll back over, break below the lower Bollinger Band again. RSI get oversold, stochastic get oversold, and then it takes off. And remember, that whole process from the second break to the third break was anywhere between 13 to 16 weeks. Okay, from the second break here and all this movement to the third time it break below the lower Bollinger Band, it was between 13 and 16 weeks. I'm telling you, be careful. Be careful. We got a lot of stuff going on in the economy. This thing may go back and get with one more low and then run up. Okay? And then stall, come back down, doing some recession type stuff, and then take off again. I'm just saying, be careful. All right? Be careful. I'm going to look at the IWM real fast, right? Look at the IWM real fast, and then we can call this quits. I think you get the picture. Okay? Keep an eye on this stuff, all right? If the second break was right here. Second break was right here for the IWM, okay? Now, if you go to the high of the week before the second break, we're talking about somewhere around here. We at 175 now. That's at 190, okay? If we go by the open of the 2 weeks before the second break, then that's right here, okay? And that's at around 186. We at 175. So if this market is to run up, I'm telling you, these areas right here is where I'm looking for some serious overhead resistance. I'm not looking for this thing to go above this because it pulled back a third time and broke below lower Bollinger Band for the third time before it took off. In history, when it made these two breaks below, it came back and did a third one before it took off. Now, this might be the one time in history over the last 20 years that it don't do that. All right? This might be the one time that it don't do that. But I'm telling you, if this thing is to roll over, come down or move sideways, come back and try to test these lows again, and then break out, I would not look for this thing to get above this area. When it get above this area, when it get to this area, I would look for some overhead resistance. Pull back, okay, and then when it get that third break below lower Bollinger Band and start taking off, then I would think that it might can do it. Because in history, in the one time that this whole setup happened in the last 20 years, that's what happened, okay? So right now, I'm telling you, I said it in the first part, I am not going to buy because of these key moving averages. Even if it get above those key moving averages, I'm telling you, I am still going to wait because I think it's going to get rejected if it go up there and then go back to break for the third time. I'm telling you, that's what I'm thinking. Now, I'm going to stop with this. You see where the IWM is at on 610. This high right here, this area where the high of the week before the second break, you see that? 610. Pick up when I'm dropping down right now, y'all. You see the high of the week before the second break, right around 610, 6.3, 610 and 6.3, the weeks of, right? Okay, let's look at the SPY. You see the high of the week before the second break, look, right around 6.3, 6.10, right? This is not financial advice. But wouldn't it be wonderful if it was? But it's not. But if it was, you will not lose a lot of money. Pay attention. I hope you're picking up the jewels that I'm dropping. You see what I'm saying here? 6.3 and 6.10 is around the high. What was happening around that date? 6.3 and 6.10 around those highs? Okay. Let's go down to the daily chart. Okay. Do you see what was happening right there? Do you see that? You see this consolidation area right here? You see this consolidation area right here? Okay. What is that? 6.6, 6.3. You see that? 6.9. You see that area? 6.3. You see it? You see it? 6.10 was the Friday. It already fell apart. You see 6.3, right? Because on the weekly chart, it's the Friday. It ends on the date is the last day. The bar ends on Friday. But you see 6.3, 6.10. You see the consolidation? All right, that's a SPY. Let's look at the DIA. You see 6.3, 6.3 the week of, and going into 6.10. See that consolidation? You see it? Okay, let's look at this. Let's look at the SPY. Same thing. 6.3, 6.10. Let's look at the DIA. You see it? 6.3, 6.10 week of. You see it? The consolidation. You see that? That's where the consolidation is at. So if this thing run up, this consolidation area could be it, and we roll back over. I'm telling you, be careful. See the IWM? You see the 6.3, 6.10? See? This high consolidation here. That's if we make it there. That's if we make it there. But if we do make it there, before that third break, below the lower Bollinger Band, be careful. I hope you picking up the jewels that I'm dropping. See you in the next video.